What is up? Welcome back to another video, which is going to be on the draw of liquidity. Now, draw of liquidity is very important when it comes to trading, as it is how the market moves. The market is always looking for liquidity and its next liquidity targets. So you want to be able to identify a good draw of liquidity. So that just means your daily bias and where you think price action is going to target on any time frame, just to be able to not predict, but just understand where price wants to be drawn to. So let's say right now we are looking at the Nasdaq on the daily time frame. So if you're looking at this chart, what you want to see is ICT's PD arrays being respected or not respected. That is how I personally find my bias. So as you can see right here, we're on a nice bullish trend. So right here, what I would want to be seeing in this bullish trend is for bullish fair value gaps to be respected. So as you see, we have this bullish fair value gap right here, and it is clearly being respected, and we're carrying up going up to the upside. Then we just have another bullish fair value gap here, and it is also being respected, and we just carry on going to the upside. Now, let's say we are in the market around here, and as you can see, we have these bullish fair value gaps here, but if we go to the right, these are not being respected anymore. So what that would show me is, if I was trading on these specific days, what it would show me is this has a good chance that price wants to go down. As you can see, we have a market structure shift here, change of character. So I'm thinking to myself, price is most likely going to want to start going down, because we have finished this uptrend. We have started to disrespect PD arrays. We are disrespecting these fair value gaps. So now we are most likely want to go down at this current moment. And also we have these bearish fair value gaps that are being respected. As you can see, we have this bearish fair value gap right here that's being respected, and we also have this bearish fair value gap right here that is being respected. So if I was looking at this chart on this day right here, what I would be thinking to myself is, unless we come above this fair value gap right here, so unless we come above this fair value gap right here and get a close above here, there is absolutely no reason why I should be looking for longs. Yes, we have these big fair value gaps here, big displacement candles here going to the upside, but because we have these fair value gaps here that are being respected, my draw on liquidity would be lower until proven otherwise. So if we play at the markets, we have these more bullish fair value gaps here. So as you can see, we have these bullish fair value gaps here, and what's happening? Price is just disrespecting these fair value gaps, and price is respecting these bearish fair value gaps. So let me just label it for you. We have bearish fair value gaps here, bearish fair value gap, and then here we have bullish fair value gaps. So what is happening? Right here we have these daily bullish fair value gaps, and the price has disrespected it. So as soon as I get this candle close right here, as soon as this candle closes right here, I'm thinking to myself, we are most likely going to want to go down, because we came up into this bearish fair value gap here. We respected this bearish fair value gap, then we came down and violated these bullish fair value gaps. So what is my draw on liquidity right now? My draw on liquidity is most likely going to be here, just because we have violated these fair value gaps. And yeah, just liquidity gets taken here. So what would I do next in this situation? So to find, if I'm looking at price action right here and I want to find the next draw on liquidity, what I would do is I would just mark out these fair value gaps here, and I would just see if price wants to respect these or not be respected. So if we play at the price action, here we have price is no longer respecting this fair value gap. So what would I be thinking to myself right now? Well, we have one more fair value gap up here, but just because price has disrespected these fair value gaps down here, and it has took sell side liquidity, so here would be sell side liquidity, all I'd be thinking to myself is right now, so that is sell side liquidity. So after sell side liquidity has been taken, we have these bullish fair value gap, bearish. So after sell side liquidity has been taken, we have these bearish fair value gaps right here. So all I'm thinking to myself is, if these bearish fair value gaps get violated, what are we most likely going to do? We're at least going to come and test this fair value gap right here. So that would be my next draw on liquidity. So my next draw on liquidity would be this little swing high here, or actually it would be this swing high here. So what I would want price to see is, I would at least want price to come and tap into this fair value gap, just because we have violated these bearish fair value gaps here. Now if price comes up to this fair value gap and touches it, what I would next want to see is price to come to buy side liquidity if these candles close above this fair value gap. So I hope this is making sense for you guys. If candle closes above, then I want to move upwards. If the candle does not close above here, then I would just want a move back to sell side. So as you can see, price is now tapping in to this fair value gap and took this buy side liquidity. So if we entered into a trade off using this inverse fair value gap right here, then my take profit would be there, just because this is the next point of interest where price could either reverse or carry on going up to buy side. So as you can see, price taps into this fair value gap on the daily time frame, and then it reacts nicely and comes back down. So right now I'd be thinking to myself, prices came into this daily fair value gap, instead of violating it, it has respected it very well, and now price is most likely going to want to come back down. So we get nice displacement down. And another thing to note is, on this leg up we get lots of displacement, but we don't actually create any fair value gaps to up here. So as you can see, we have a fair value gap here. And what does price do after it reacts to this daily fair value gap right here? Price comes down, price violates this fair value gap. So what does that tell me? It tells me that price is most likely going to be bearish. So as soon as price violated this fair value gap right here, this bullish fair value gap here, I know that price is now most likely going to want to draw to this sell side liquidity right here. So now this would be my next draw on liquidity. And as you can see, unlike here where there is a fair value gap at the top of the leg when we're trying to go up, there is no fair value gap here on the bottom of the leg, so we don't have to worry. It's almost like we have a clear path to go to this sell side liquidity. And as you can then see, we take this sell side liquidity. Now we do the exact same thing. So we have came to this point in the market, we have just swept sell side liquidity. So we've just swept sell side liquidity. So now what would be my draw on liquidity? I would wait for price to come to this fair value gap, and I would see how price wants to react. So if we play out the price action, price respects this fair value gap and comes back down and takes sell side liquidity again. So let's keep playing the price action. Price action now comes back down again, creating another fair value gap. So there is no reason to be bullish yet until one of these fair value gaps gets disrespected. So if you keep playing out the price action, boom, price disrespects this fair value gap here. So we do the exact same thing we done earlier. As soon as price disrespects this fair value gap here, our draw of liquidity is most likely going to be this fair value gap right here. That's the wrong tool, right here. So as soon as price action comes up, disrespects this fair value gap here, I know that price will most likely want to come up and test this fair value gap. Now, if this fair value gap also gets violated, where will the draw of liquidity be? The draw of liquidity will be here because we have no fair value gaps here. We don't have any fair value gaps in the way. Yes, we have an order block right here. So if price reacts strongly to this order block, then I would be thinking that price wants to go down again, but I don't really pay too much attention to order blocks on when I'm looking for my bias. I mainly use fair value gaps if they are being respected or not on the higher time frame. So as you can see, the next candle violates this fair value gap. So now I would want price to come to this buy side liquidity right here. So if we play at the price action, and I don't know if this is going to go to buy side liquidity or not. And there we go. Price goes to buy side liquidity and takes it. Now, what do we have? We have all these bearish fair value gaps. So I think you get the point. We just look at the higher time frame, we look at fair value gaps and just see if they are being respected or not. So now we have this fair value gap here. So if this fair value gap is now violated, I would want to see price come up to this high here. And I can't actually play the price anymore. This is now on a live time frame. So now that this high has now been taken, what I'd want to happen next week is for price to come up, take this liquidity sitting here, then potentially come back down and either carry on to the downside, or I would want to just see how price reacts after these fair value gaps and if a fair value gap is created here. So yeah, I hope you understand that quite well. What I'm going to do now is just go into a 1 minute chart and just give you a quick live example. So what I'm going to do is just go to replay mode. I will just I'll go to a 5-minute time frame, and I will just scroll across. I'll look down and I'll randomly click somewhere. So yeah, what day are we on? We're on a Wednesday. Let me just skip to when market would be open. So that would be 9:30. So here we go. Price would open right here, and this was obviously a news day, which is a bad example. So I'm going to find another day. Well, we could do this news day actually. Let me just show you. So what I would firstly do is I would look at the daily chart, and as you can see, I'm looking at this daily chart, and we have just taken sell side liquidity, so I would keep that in mind. But we are also respecting this bearish fair value gap. So actually, what I would do right here on this day, I would not actually have a string bias for either direction, and the reason being is because we have just took out sell side liquidity. So I would not be looking for shorts specifically here, just because we have took out lots of sell side liquidity and news has just been created. So yeah, let's wait for price action to create a bit of candles. Okay, so here we go. So here we have candles. So what would I do in this situation? All I would do is I would find certain PD arrays and I will see how they get respected. So as you can see, we have this fair value gap here, the first fair value gap created. So I would like to see how this is being respected. And as you can see, we get a string close below this fair value gap. So now what I would be thinking to myself is price will most likely want to go and reach this low here. So then we play at the price action. What does price do? Price comes and takes out this low here. Now you've seen that this is just a random day. I've just switched it to a random day, and let me just keep playing out the price action and you can see. So right now for this day, I would have no higher time frame objective as we have just took sell side liquidity. So I'll just be playing the internal range of liquidity and seeing where price takes us. So right now we create more fair value gaps. But I wouldn't actually be trading right now because it is over lunch. So if we just skip to 2 p.m. when I would actually be trading, so here is 2 p.m. So this is when I would start trading again. So what's here, we have these bearish fair value gaps here, and now we have created a bullish fair value gap here. So to determine my draw on liquidity, I'll just see how price reacts to these certain fair value gaps and if we get displacement or not. So as you can see, we tapped into this fair value gap. We then tap into these fair value gaps here, and then we violated this bullish fair value gap whilst holding. Sorry, we violated this bullish fair value gap whilst holding these bearish fair value gaps here. So we tapped into this bearish fair value gap right here. So then what does price do? Price will most likely want to come and take sell side liquidity, as it does. So then now price has just taken sell side liquidity. So I would not be in a position there. Then we just keep playing the price action out. We have a tiny fair value gap here. So although yes, this is a fair value gap, just because this fair value gap is so small, I would most likely not pay any attention to it. I would wait for a reaction from this fair value gap if price would want to come into it. So if I just keep playing out the price action, no fair value gaps have been created. Price is very volatile here. Price finally has made a fair value gap here. So I would just see how price reacts to this fair value gap. Now, personally, I would not be taking any trades right now, just as you can see, this price action just is very choppy. But I'm just showing you guys how to find your draw on liquidity. I'm not actually sure why that gap is there as well. So yeah, we just keep playing out the price action. I think you guys get the point. So we just see how price action respects certain PD arrays. So as you can see right now, we have this bullish fair value gap here. So if price comes down and closes below this fair value gap, then I would want to see buy side. If price respects this, sell side, sorry. So sell side liquidity. If price respects this fair value gap, then and shows me displacement. Never mind. What I was going to say is if price respects this fair value gap and shows me some sort of displacement or inverses one of these fair value gaps here, then I'd want buy side liquidity. But as you can see, this bullish fair value gap got violated, was closed below, and then we took sell side liquidity. So yeah, I hope you can know I hope you can now trade and determine your draw of liquidity a lot easier using this little strategy that I've given you. So right now we have just taken sell side liquidity. We have this bearish fair value gap. We have another one here. So let me just draw these on. We have fair value gaps here. We've just took sell side liquidity. We have another one here, and now as you can see, we have this bearish fair value gap that has just been violated. So what would I want price to do? I would want price to at least come up and tap into this bearish fair value gap right here. So let's just play at the price action. There we go. Price comes up and taps into this fair value gap here. So yeah, if you do this on a higher time frame, this is a very useful way of finding out how to, well, it's just a very nice way to find your draw of liquidity whilst trading. Now, what you can also look at is, as I said before, if you have clear equal lows or you have clear equal highs, then that is most likely going to be the draw. But if you're getting confused on that, if you just go to the higher time frame, you look how price action is respecting certain PD arrays and if it's violating them, and that is a very good way to find your draw of liquidity. Now, as I said earlier, we have just took this buy side liquidity, and now we have violated this bearish fair value gap. So what I would want price to do next week is come up to this high. So you can go back, look at your charts on the Monday 13th of November to the 17th of November. So go to your charts now if it is past this date, and what I would like price action to do is actually come up and take this high right here. So hopefully it would have done that by the time you're watching this video. Yeah, so I hope this video has helped. The only condition where price doesn't take this high right here is just if we create a bullish fair value gap, if we come close to taking it, and then if we violate the bullish fair value gap and turn it to an inverse, then I would want a retracement back down into this area here. But yeah, I hope this video was helpful using inverse fair value gaps and mainly just fair value gaps to find your draw of liquidity. Now this is going to only be part one. There are other ways to find your draw of liquidity that I haven't spoke about as much, like equal highs, equal lows, that are very